All right, guys, what's going on? Good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is Thursday, May 19th, 2022, 5:06 Eastern Standard Time. My apologies for running a little bit late. I had to look for these bad boys. My wife likes to use them. Here's my microphone for this. It's the Bluetooth mic. Always turns off on me. I don't want any issues with sound. So if there is issues with the AirPods in terms of the microphone, let me know. And I can always switch it back to the Bluetooth mic if that's something that everyone is pleased with. I usually just take these everywhere, a lot easier to talk to. Anyways, good afternoon. Bottom right hand corner of your screen, white logo, click on that. Turn on notifications, subscribe to our channel, like our videos, hit that thumbs up button. If you do, thank you again. So today, very little liquidity. I was blogging about it today with the guys on Discord. Very, very choppy. Not much going on. Again, the only thing I see on S&P here, and again, I just want to go over this chart before we go over the rest of the day. Double bottom, possibly. I tweeted that as well. Now, could it be that simple? Could we get that double bottom? Could we get that pop? Well, we got close. I was looking for this neckline here of 39.50 for the previous head and shoulder inverse head and shoulders to break. It did not. You could see we got really close. 39.43 did not happen. We rejected pretty handily. So again, with low volume and low liquidity, meaning not many people trading, prices usually go lower here. So again, we're starting to see as we go along, and I talked about this, kind of the big names, the generals, the ones that you don't want to sell, but you almost have to. Walmart, Procter, Coca-Cola. Again, these names have been pretty steady. Dividends, Costco, Target, still another 5% down. They've been down. Microsoft, Apple was down 2.46%. I mean, who doesn't own Apple? Google down another 1.47%. It's at 1.7% today. But look at the names that have been outperforming lately. Interesting. Did you know that the semiconductor index, SMH, has been outperforming the S&P? Pretty crazy, huh? But look, a little bit, now we're got a little bit back of rotation. We were red on healthcare. We were red on energy. We were red on consumer defensives. If you go to groups really quickly, you could see defensives took the big brunt. But materials, cyclicals, healthcare did well. Energy did okay with the bounce in commodities. We'll talk about that. Utilities did okay. Financial, red. Technology, red. Apple being a big chunk of that. But for the 1 week relative performance, is still the kind of safety names, utilities, healthcare. Materials are a little more cyclical. Energy, of course, being now the safest one to go with in a sense where all the demand is going as higher crude energy prices continue to go. But technology, eking out a gain for the week. Communication services, real estate, Nasdaq not doing too bad. In terms of kind of looking at the totality of things, it's still red for the week. Obviously, I'll go ahead and take a look here, and I can show you how the market is doing so far this week. You can see that IWM small caps up 2.26% this week. Nasdaq down 0.58%. S&P down 0.75 for the week. Bitcoin outperforming just today, up 2%. And that's where I really want to pivot to is the fact that look at the names that we're leading today, guys. Shopify, GameStop, Zoom. SoFi is up 49% this week alone. Coinbase, Upstart. Upstart is up 49% just this week alone. Square, Airbnb, PayPal, Neo. These were once names that everyone dumped. And now what's everyone kind of dumping now? The staples. They're a little expensive now, right? Starting to talk about relativity in terms of the price, what we're paying for the value. And again, I kind of don't want to go back to this because it's something that I have been repeating in regards to the investment club, in regards to the blog. What you pay for things matter. Again, it's all about the price you pay. Let's take a look at price to earnings ratio based on a forward PE really quick. Target at a 10 is pretty cheap. Walmart, 16, pretty cheap. Apple's still expensive. Microsoft's still expensive in terms of average PE ratios. Look at what's value here. Healthcare is still good value. Banks, still value. How about energy? Even with all this rise, shows how beaten down they were. And look at these cyclicals. They're still relatively cheap. Not everything is Amazon, Tesla, Apple, Microsoft, or Google, even though they're a big part of it. But again, there's some value out there. So I would recommend taking a look at the heat map, according to FinViz here. Take a look at your forward PE ratios. Compare it to here, S&P 500 PE ratio. And you can go here, just Google that, and you can see the exact PE ratio for the S&P, the entire market, now trading at a 17.1. The current not 19.71. The median is about 14.89, and you can see we continue to get back to at least higher band stabilization in terms of price. Things are in terms getting cheaper in relative to earnings. So again, people are going to take a dip in the water. The market is not going to fall forever. The question is, which of these names or which of these companies are going to lead the way out? For example, I bought me some Merck. It's trading at 12 and a half multiple PE and a great chart and pays a 3% dividend. That's a good company to own for me. Again, it gives me capital return. So you're in between two parties here. Do you want that kind of flip the house? I just bought it, I want to flip it kind of thing. I want some capital appreciation. Or do you want cash flow in regards to dividends and stock buybacks with value? That's kind of what you're fighting yourself with. And consumer defensives, in a sense, were that safe place to hide. But unfortunately, it is not at the moment. But they'll come back. Definitely will. Again, price discovery is still being shown, as we could see on a Walmart, on a Target. These names are not supposed to be moving 20% in a day. It's throw the baby out with the bathwater, get me out of the market. I don't care what happens. That's what people are thinking. But not in a way that you're thinking of 50 VIX or a really fearful way, just increment selling, down when we go. Now, the question is, why are these names up, these high betas? ARKK is green for the week, guys. ARKK is outperforming the QQQ, outperforming the S&P this week. Could it be just a blip on the radar, or is the market saying, hey, I'm willing to dip my toe a little bit in some risk? I want to go ahead and start buying Shopify, Zoom, Coinbase, Upstart. Crypto did well today. Look at that. Bitcoin actually did well today while the S&P and Nasdaq were down. That might be telling something that we're starting to get a little bit of a leading indicator that, you know what, risk wants to be taken. Doesn't mean we're at a bottom, but again, usually in a war, the soldiers, the frontline ones get hit, right? And then you start moving higher, the generals get shot last. That's the saying. Well, generals shot last. What are those names? Consumer defensives, the big technology guys, the guys who got you to the dance, the ones that actually have been outperforming up to this time, those are getting sold off. That's what you're seeing a sell-off of. Taking a look at the markets, the Dow closed down 0.75%, down 236. Again, a lot of value names are in that. So again, underperforming the broader index. Nasdaq didn't do too bad, down 0.26%. IWM small caps were actually green today, and S&P down 0.58%. The VIX, we talked about that gap fill. It filled it. You can see right here, yellow line. We came back down, still red VIX, still red S&P, still red stock market. You're not getting that fear out there. Volatility is not telling you the whole story. Dollar index, that was big today for commodities, down nearly 1%. Yields coming back down. TLT starting to get a bid this morning and then faded. Possible triple top on rates, on bonds, possibly. But if we do break out, rates are going to go lower, which, again, not what the Fed wants in terms of demand, but again, some reprieve for those who are looking to buy a home, possibly. And speaking of homes, we actually had existing home sales actually down about 2% month over month. So the Fed's mandate is kind of working in terms of demand. That's really the last thing, guys. If housing does not fall, let's say if housing values continue to rise, that's pretty much the last shoe to drop. That would probably be a full-blown recession, in my opinion. So if housing can kind of stabilize, the stock market can find its footing in a point where you're not getting any more panic sellers. We started getting some positive news. Then that started indicating a bottom. But look at this. We got really close on S&P. That 20% level, just right below 38.50 would get you to 20% bear market. We didn't get there. We got as close as 38.56. A tease of a market, I tell you, a tease. But look at gold doing its job, up 1.34%. Finally, the safe trade, right? Silver, energy, oil up 2%, gasoline up 2%. So again, they're doing their thing, and bonds were being bid today as well. High yield credit, even though the Nasdaq was red, was green today, and investment grade credit up 2.27% today. So kind of a mixed bag today. If I had to kind of put it all in one word, I would say digestion sounds about right. I think the market is digesting all these moves. Tomorrow we have OPEX, which is the options expiry for indices and for commodities and for stocks, you name it. Futures options there too. So those are going to be expiring tomorrow, the third Friday of the month. So again, you usually get elevated volumes, you get elevated volatility. So again, this kind of snooze fest that you had today, kind of a chop fest. Tomorrow you'll get some more volume and you'll start seeing possibly some fireworks fly. Up or down, we don't know, but usually when you get lower volume, You mean you're sliding down. You're not going to get a melt up. You're getting a meltdown since then dealers have to lower bid prices in order to attract volume for the market. Good afternoon. Do you think oil names like CVX have any juice left? Absolutely. If you want to go ahead and get into some energy, at least you get the dividend. At least that. In terms of is CVX okay? Yeah, I would want to wait for see if we can pull back a little bit, maybe to 150. But here's not terrible either. Again, you're going to get a good yield from CVX. They're very shareholder friendly. Obviously, with commodity costs of oil continuing to rise, it's not going to last forever. But here's my question to you: if oil broke down below $90 a barrel, do you think CVX is still fine? If you don't, then no, I wouldn't buy it because we may just get around there. Again, we may get to peak inflation and oil prices start rolling over. I wouldn't want you to hold CVX just because you think it's a swing trade. I would own it just for the yield. Hey, Carlos, good afternoon. Thoughts on a market tomorrow expecting a bounce more downside? Let's take a look at it. I expect more downside. Tomorrow being OPEX, sure, we may get a couple of pops in the morning, maybe a gap down tomorrow, who knows? But again, double bottom, who knows? I mean, that's interesting. But again, for anything to actually consider a meaningful bounce is probably 39.50 short term. That'll get you above that neckline, 40.50. Here's my concern by the end of the month. We do have rebalancing at the end of the month. A lot of these pension funds and mutual funds have to rebalance their 60-40 portfolio. 60% stocks, 40% bonds. Well, we know bonds have soared, but stocks have fallen. So what happens? You have to rebalance. Bonds will probably get sold off, and stocks will get bought up to the end of the month. That's really only a week and a day away since we have Memorial Day weekend. Where can we go from there? I think we'll probably get to 41.01 by then, but we got to get to 39.50 first, sustain that, make that at least a floor. Let's get away from this 20% bear market. The thing that's worrying me about this 20% bear market level, it may trigger a lot of stops for a lot of long traders who've had stocks or S&P or futures contracts up to that level. That exact 20%, round number theory, keep that in your back pocket. There's so many variables, guys. Again, if we get one piece of good news somewhere, somehow, again, Fed related, China related, Russia, Ukraine related, anything like that, you're going to get a pop really quickly. Again, this is what happens when you have low volume out there. Even incremental small buying will create a spike. And even just a little bit of selling will create a cascade. So it's kind of like walking on eggshells here. Just got to be careful. Did you buy more shares of Apple? I did not. No, I did not buy any more shares of Apple. Now you're probably saying, why not, Carlos? It's your number one holding in your portfolio, right? Yes, it is. Well, looking at Apple, 137.35. That's that gap fill. I talked about that on Twitter. Could we hold that? I'm actually looking to see the Burry thing. See if Burry is probably going to cash out on those puts. But 130 is a very, very big level. If we start breaking down below all-time highs, I mean the 20% barrier on even S&P futures, 130 is coming on Apple. Where would I want to buy on Apple? Again, the PE ratio is at 21.47, a little rich. If we get to 130, we'll probably get to sub 20 if all earnings hold, depending on when that happens. But again, a good level to pull a trigger. God, I can't even think or even fathom this. 120, 120. There's a gap to fill right there. Take a look at it. Right there, there's your gap fill. So let's go ahead and mark that. We already filled one. Let's see the next one. Next one is right here. I believe that was on earnings as well. Sorry, I don't have my glasses. 120.54 seems about right. Remember, we just filled this one. Let's see if we bounce. Can we get back to 150? Does the S&P break those 20% levels? If it does, Apple's going to 120. And then you have to stay short. Again, you're basically selling any kind of rip at the end of the day once you start breaking those lows. 37.50 is what I'm waiting for on S&P. Let's see if we get there. The faster we get there, I think I'm the happier I will be. Alibaba earnings coming up soon? What do you think? Alibaba has one thing and one thing only. It's China. That's all it is. If China can kind of get loose with their regulations, kind of get away from Baba and start being on top of them, there is a gap to fill here at 160. Right there, 158, 160. So that's a very big level. Could we fill that gap to the upside? Absolutely. We need a monster quarter to get us to around 123.25. That'll break us out, and then the gap fill will be there. The market is going to definitely reward those who smash the quarter. If you have any kind of miss of any kind or any kind of slowdown, you're going to get punished, a la Target and Walmart. And remember, BABA is e-commerce. So again, e-commerce hasn't done very well at all. Hasn't done well. And then we had China lockdowns too. Maybe that could help in terms of Alibaba. Could be that kind of inverse story where the United States is getting out of COVID, China is just getting in the throes of COVID. Maybe the names that worked in the United States, the Chinese counterparts, might be an opportunity there. So maybe BABA does get a little something going, a little something cooking with their earnings. Maybe better volume as the Chinese people are at home battling COVID, battling those lockdowns. Maybe BABA's a beneficiary, or they're going to be to the point where they're just beaten down or they miss something, and then it just cascades effects as well. I think BABA does beat. I like BABA. I own BABA. Let's see if it does break 123. That's really the only level I would want to actually buy. I want to buy on the uptrend when I'm trying to find a bottom. I don't want to get the exact bottom. I want to see at least some momentum. Apple puts are crushing right now, though. Thanks for the advice, Carlos. You're welcome. I did not trade Apple. I'm very gun shy lately, that's for sure. It's been absolute just tough. But again, I'm going easy and slow. Let's see what I can get. I got some puts that I've been holding as well. And let's see if we can get that next level down. But again, Apple is something to watch for, because if Apple, that's that last shoe to drop on the equity side, because it's such a beloved name. I know I love the name, and everyone pretty much owns it. If you own an S&P fund, you basically own Apple. So if Apple gets sold off, stock market's going to get affected. And we can see that the high betas are not affected right now. They're the ones getting bid. It's really the Amazons, the Teslas, the Apples, and the Microsofts, and the Googles that are taking the hit. The question is, when do we get a bottom, and how much more do we get? Right? Is there a turn in the corner where things can get better? Well, that remains to be seen. So again, we can get those pops, but really the only thing that'll invalidate or kind of tell us that we're going higher is really 4,600. 4,600 would be, that's where all clear is. Why do I say 4,600? That's so far away, Carlos. Why? Why? Well, we got close in March and we rolled over. That's exactly where we were. Look, rolled over. Break 4,600. That'll break that last rise and get us back to where we need to go, which is higher if you're an investor, obviously. Well, okay, guys, we'll leave it there. Have a great rest of your afternoon, and we'll catch you guys tomorrow for the morning note. Thanks again. As always, make sure to hit that like button if you like these videos. I love doing these with you guys every single day. It's very important to keep things in context. As always, I get to see you guys twice a day. Always fun. Thank you for your questions. We'll see you tomorrow. Cheers.